Hi everybody, this is Dean. I appreciate you taking the time to answer the most important question, which is why would you invest in apartment buildings? We've answered the question in other videos as to why would you invest with Marquee Real Estate Partners. But one big question is why apartments at all? And I've compiled a whole bunch of quotes. There's been a lot recently, but there's a few that I think are really important and address this issue. In January of '09, Stephen Coyle wrote in Real Estate Finance and Investment. He's with Cohen & Steers Capital Management, big owner of real estate. Once the repricing occurs, it will create one of the best buying opportunities that we've seen in a generation. Michelle Prale, the Chief Operating Officer of J.E. Robert Company, said the dramatic asset repricing will result in some of the best bargains in real estate investing during our lifetimes. C.B. Richard Ellis wrote in August of '08 in their multi-housing capital markets special report that apartments have outperformed every other property type over the past 25, 20, 15, and 10-year periods. So, in my mind, all decisions are weighed by the risk versus the reward. And certainly investing in apartments is not without its risks. There are risks, but we like apartments because the relative weighting between the risk is low compared to other property types, and the upside, the reward, is higher, as I just cited. So, why is that the case? One reason is inflation protection. With short-term leases, a tenant goes out of an apartment building, you can raise the rent to meet inflation. That's particularly important consideration right now, as I talked to you in January of 2010. With multiple tenants in place, you have less risk to the net income. For example, if you have a 100-unit apartment building and one or two tenants fall out, we're not going to be happy, but we're certainly not going to dramatically impact our bottom line. If you have an office building or an industrial building or a retail mall, a little strip center, and two tenants go out, you might be underwater, coming out of pocket with your other income to keep your building, mortgage and so forth, running. C.B. Richard Ellis also reported that apartments enjoy the highest risk-adjusted returns as compared to any other property type. Another good reason, there's an absolute shortage coming to meet the demand that's growing for apartment buildings. The key renter cohorts are age 20 to 29, people just getting out of college, 50 plus, those people who are empty nesters deciding to downsize, and immigrants. Those are absolutely staggering population segments that are moving to those key age groups in a huge mass, simultaneously, in part because of the economy, the fact that there's very little debt available to build new apartments. The demand or the construction right now is well below average, and even at average, it wouldn't be enough to satisfy the growing demand. Give you a couple of statistics. There were 94,000 apartment units built in the United States in 2009. In 2010, it's projected to be 65,000, and the average for the last 20 years was approximately 200,000 units a year. So you're talking about literally, a fraction of the average. Now, if you look at what the projected demand is, according to the National Multi-Housing Council, the demand will be somewhere on the order of 400,000 plus units per year for the next 10 years. In the near term, there's no way that that demand will get met. So the natural supply and demand imbalance means that there will be upward pressure on rents. We'll be able to raise rents, and downward pressure on vacancy, where occupancy levels will rise because there just won't be any other choice. There won't be enough apartments for the demand. Eventually, the balance maybe will swing in another direction. We're cognizant of that. We want to be in markets where there are high barriers to entry, where you simply just can't build more apartments, either because there's no land available, there's a predisposition locally against new development, and where the demand is going to grow the fastest and be sustained the longest, so that we have that unique environment where we'll have high occupancy levels and the ability to move our rents up. Further to that, what we like apartments and owning apartments because we have the ability to add value. That's probably true in a lot of different property types. With apartments, what's unique is each time a tenant goes out, we can adjust the what's in that unit to meet the demand. As for example, as design features change, if an apartment's been occupied a long time, we can swap out bathrooms and kitchens at a relatively low cost. What's unique is when you do that, of course, you can immediately raise the rents. And when you raise those rents, every dollar is a round figure. Every dollar you raise your net income increases the value of the property by $10. That's an incredible, incredible return on investment. And it gives us the ability to control our destiny in a way. In the space that we're targeting, there are a lot of independent operators, independent individual people who try to do everything, and they simply can't fully exploit the asset value. They're perhaps not aware, they don't have the time, they don't have the skills, they don't have the manpower, the inclination. I can't tell you how many times I've met with owners who've said, well, I didn't raise the rent because I don't want to lose the tenant. That's a very short-sighted view, and it has cost them millions of dollars in the long run in terms of asset value. Final point I wanted to make was we have the ability to leverage our returns. By that I mean this. Let's just say you have $100 and you invested it in and you buy $100 worth of stock. The stock goes up 10%, you sell, you have $110. So you made a profit of $10. By leveraging, very typically, an apartment building, you can leverage at 75%. In other words, you can get 75% of the purchase price from a lender. Let's just suppose, though, you only got 50%. So your 100, you can match with another 100, buy a $200 building, okay? Let's say that building increases in value by the same 10%. It's now worth $220. That's a fairly staggering result because your return on your cash is $20. So you've doubled. You have got a 20% return because you had 50% leverage. And of course, it gets better than that. There are significant tax benefits and tax treatments and write-offs that we can enjoy because we own real estate versus owning a stock. So I hope that gives you a big picture. I wanted to close with just this last quote. Richard Lefrak, he's the CEO of the Lefrak organization. He said in November of 2009, 2010 and 2011 will provide the best buying opportunities in a generation for investors with cash or the ability to borrow. I don't think it's ever going to be better than that the next year and the year after that. This is the time. We invite you to act. We invite you to call, get your questions answered. This is the right place and it is the right time, and we welcome you to partner with us.